Let me give you another scenario here, guys. You can see this candle has flipped bullish. You see the previous candle has flipped bearish. You see the previous candle was bearish. In theory, this candle is going to close bearish, yes or no?
Yes.
So that being said, we expect it to go an average range of about this much. From where it flips to anywhere along the sequence, could you hit sells?
Yeah.
We can hit sells because here is the logic behind this and the indicator behind this. Every candle creates a top wick or bottom wick, and if it flips and it pushes bearish, more often than not, it continues bearish. And if it pushes bullish, more often than not, it continues bullish. Now, where it gets noisy is when you get down to the 5-minute time frame, because you now start to incorporate structure, pullbacks, and whatever else. But if we go in with the theory that a candle must close bullish and must close bearish at some point today, if I enter here on the 4 hour with my stop loss above here, and I decided to go for 1 to 3, would I have hit it? The answer is yes. If I went for 1 to 2, would I hit it? Would I have hit it? Yes. If I went for 1 to 1, yes. Okay, based on the theory that the wick was created, it flipped bearish, I entered. Now, on this occasion, it didn't pull back, it didn't create a top higher wick, but it doesn't matter. The idea is that if it creates a top wick or bottom wick and flips, it will continue. But then if I entered the trade here, let's say, and I went for a, let's say 1 to 3, would I have hit it? On this occasion, yes. 1 to 2, yes. 1 to 1. On this occasion, yes. But here is the problem. When you enter this trade and you go down to the 5-minute time frame, you have what we call structure that gets formed. So that's just the 4H candle pushing bearish, retracing, pushing bearish again, right before it gets down to its lowest point. So when you enter this trade, the idea is correct. The indicators are correct that you are entering a candle that is pushing bearish that will close bearish. Here's where the problem happens. If we put our stop loss here, let's just say, assuming that, I don't know, let's just assume this was a lower high. The only problem that arises in this situation is that price can pull back and stop you out and not follow structure on the 5-minute. But if we do this, and put it above the highest point, and then whatever reasoning you make, I'm going for 1 to 1, 1 to 2, whatever it may be, I would just assume 1 to 1 on GU. What makes this trade much more of a high probability to winning than having it the other way? Well, the fact that we're using the indicator that we previously entered the trade with, which is price will create a top wick. When it flips, it will continue bearish and close bearish. And we respect that confluence, that principle, that idea, right? Whatever you want to call it, because we're putting our stop loss above the wick. So this is almost a guaranteed win. But us as traders, we don't want these types of setup. For some reason, we don't want the guaranteed win. We want a better win. And this is where most of your problems lie. Not the fact that you can't identify where the market is going. It's because you identify where the market's going and you try to get the most out of it every single trade. Does this make sense? So you go from potentially making 2R a week, 8R a month, to being minus 4R, plus 1R, plus 2R, because you're always looking for more out of the market, even though you was right in the direction that it was going. Now, I'm not saying go for 1Rs, but what I'm saying is understanding the principle here, that if this, or the idea here is that if this candle is pushing bearish, it will close bearish. So in theory, you can enter at any point you want. But the only time the problem arises is when you slightly digress and do things like this, or you slightly digress and you do things like this, or you do things like this. And that's when you run into problems. So you got to get dialed in as to what confluences / principles you're going to follow based on your observations and then run with it. And here's something that I just want to point out to everybody. You can do this on the 15-minute. It's all the same shit. It just depends obviously which broker you're with in terms of spreads. But look, but let's just do a nice one here, right? Oh, top wick, flip bearish, stop loss above here. Okay. Oh, look, top wick, flip bearish, stop loss above here. Go. Now, what I don't know when I'm doing this, obviously, is if the trade's going to win or lose. But that doesn't matter because we're playing the numbers game. And as long as I have an edge, which is my risk to reward, that's all that matters. Now, here's how you create the confluences or influences around those trade ideas is this. What needs to be a confluence that will help me to take these trades with confidence? Okay. Well, look, when a candle closes bearish, the next one's usually bearish. And when a candle closes bullish, the next candle's usually bullish. When a candle closes bearish, the next candle's usually bearish. Confluence number 1. Okay. So did the previous candle close bearish to convince me that candle to be bearish? The answer is yes. The next thing I'll say to myself is this. That's only one confluence, but it works. Okay. The second confluence I'll think about here in this scenario is what is the development of a candle formation? Usually wick first and then body next, right? Oh, that's true. So did it create the top wick? Yes. And did it flip? Yes. Okay, so I'll add that as my confluence. Okay, the next thing I'll say to myself is, Well, how does structure usually work? Well, if price is failing to break a structural low or break a structural high, then in theory, price is in a range. But if price starts to break the structural low and or breaks the structural high, there's a much higher chance that the bearish sentiment is much stronger and we should continue down. So on this occasion, has it broken the low? Is it bearish? And if so, technically it should continue down. So now I can add that as a confluence or influence. And then I can say to myself, well, where am I targeting? Well, I could use data to the left because this looks like a nice range. I could see there's no traffic here. So that could be an influence or a confluence, whatever you want to call it. Or I can just simply say to myself, well, I will just take the average range of what I can see the candles to be. I'll see where I entered and I'll see where my target is. Is a 1 to 2 reasonable? The answer is yes. So that's a fourth confluence. So now I've just created a strategy on the 15-minute time frame using 4 different confluences, simply based on not what I want, based on what happens in the market all of the time. Okay, not all of the time, but happens often. Now, let's say that this idea only works twice a week. Okay, twice a week. And in the perfect scenario, 2 trades win. Okay, because it only happens twice a week. Perfect scenario, guys. 2 trades win, 3 trades lose. I win 2 trades at 3R return. Okay, or even 2R return. Let's not go too wild with the returns. Let's say both wins are 2R return. So that's 2R and 2R. That's 4R. It only wins twice a week. So that's Monday, Tuesday. And then Wednesday, Thursday, Friday, it loses at 1R. So that means now I lose 3R, but I'm up 4R from the 2 wins. That means I'm at a net profit of 1R for the week. Understanding the maths, guys? So if that strategy gives me 1R a week, technically that's 4R a month. Now, what is the maths? Who's good at maths here? Right? We take 20 trades for the month. 20 trades for the month. We win 8, lose 12. What's the ratio on that? What is the maths on that?
+4.
Yeah, that's +4. I get that part. What is the winning rate?
40%.
Yeah, good. Right. So now I have a 40% win rate strategy. 1R a week I make, 4R a month. And then what you do here, you say to yourself, well, this is how it works. I have a strategy. These are my influences and confluences. This is my winning ratio, 40%. This is my return each week. This is my return each month. So technically, it's going to take me 2 months to pass my challenge and 5 weeks to pass my verification. So I know that on April the 5th, just say April the 5th, I will be funded with X amount. And this is what you call certainty. This is called building belief. This is called having full conviction that nothing can possibly, the results cannot possibly any different to what you absolutely believe in to be true. And then guess what? You come into the markets, you take the trade and you don't even bat an eyelid. And you just swear not. You just believe in that and marinate in those thoughts and that belief system for as long as possibly is needed until it becomes a part of your identity. And then you absolutely cannot fail. And that is what you have to do in every aspect of your life, but particularly trading. And we just created a strategy on screen together. We built a belief system. We built a trading plan. We built an absolute time scale of when we're going to pass our challenge, when we're going to get funded, and to the exact date, just like that. Now, you guys don't need to create a strategy because you have one, obviously the NDS concept or principles, if that's what you're trading, or NDS 2.0 or whatever it's you're trading, you have that. So you have the framework. Now you just got to put it together, get some necessities together that you can observe to be, that will serve you just to make the right decisions, and then just get in the markets and just follow it. It's just incredible, guys. And then you might be in this trade now and say, well, I'm at 1R, I'm going to go break even. I'm at 1R, I might go stop loss half. I'm at 1R, I might go 50% off. I actually don't like management, so I'm going to become a set and forget trader. So I'm just going to leave this. And you just build in a strategy, man. It's just insane, guys. It's just insane. You can do whatever you want. You can add another confluence to this if you like. This is not me making shit up. This happens all the time. I can see that price is currently trading below this trend line. As long as price is trading below this trend line and I have my stop loss above that trend line, then in theory, price shouldn't do nothing but continue to trade below that trend line. And I will enter this trade and That's it. And because the main principle of this idea is this, that as long as my stop loss is above this trend line, because it has not broken this trend line for such a long period of time, then in theory, I don't even need to wait for a confirmation. I will just enter the minute price gets as close to this trend line as possible and hit sell. Because the idea behind this is as long as the stop loss is above this trend line, because price has not broken this trend line before, and then the previous candle closed bearish, and or the 4 hours currently bearish, and or I trade 1 hour 15 minute, and or there is a structural low to target, whatever you want to add to this, be it you have to make it true, not make it up, make it true, then this is a valid concept as well. It's just insane, guys. It just is endless. But what I will say to you is this: whatever you create has to be something you are comfortable with. Does this make sense? That is the most important part of what I'm telling you right now. You must be comfortable with it. So don't look at social media, Instagram, TikTok, wherever you go in, trading in the zone, this book, that book, and say, oh, this trader made X amount using this strategy. That must mean that this is the strategy for me. And this is going to give me the best results. You've got to say to yourself, hold on a minute. Am I comfortable with the ideas that encompass this concept? If the answer is yes, then never question it and go full force. Does this make sense? Guys, this is probably one of the most powerful lessons I have given to date. And I don't know how we got on it. This is why I say it's so important for you to ask me questions, because then you allow me to dig deep and be able to teach this to you. As far as I'm concerned now, well, you might as well say we hit TP, right? But here is another one as well, something you have to think about. We might as well talk about a couple of other things you have to think about. My target for the month is $1,500, $1,500. Just say, let's start there, $1,500, okay? You've risked 1,000 and price is almost like your 2-hour target, meaning you're up what? 1,700, 1,750, thereabouts. Take away the spreads, let's say 1,650. You have to say to yourself, do I need price to hit to 1 to 2 because of the stigma that is attached to holding your trades to TP? Or am I so focused on the fact that I only need to make 1,500 this month and now I'm up 16, 1750, or now 2 grand, right? I can close my trade before TP. Because remember, when you're trading, you're in the market to do what? Make money, right? If there wasn't a risk to reward ratio tool, look, I just asked a question about percentages. None of us knew the fucking answer. We're shit at math. So why are we worried about hitting the perfect 2-hour, 3-hour trades? The point is this: go into the markets, know what you're going after, and once you've got it, get out. Is this making sense, guys? And I really want to drive this home, because I'm not saying that a good risk reward ratio should be ignored. But what I'm saying is this: just know what you're going after. So many of you are just here to trade, but you don't know exactly what it is that you want. And this is why today's lesson, even though I didn't even know this was going to come up, is probably one of the most powerful lessons that I've taught without even knowing I was going to do it. Okay? Just some things to think about, guys.